Hello everyone, welcome to the Ichimoku charts.com daily analysis for gold for Monday, October 29, 2012. Well, no change of trend today, and we have a candle that's made a lower high but a higher low. The candle we're analysing is the second last candle on the chart here. That final candle is still developing and fairly significant at the moment. We'll look at that in a minute, but it hasn't completed yet, and it will be some time before that candle completes. But with the current candle, it fails to change the trend. Previous day's trading, we had an outside day, in bar chart terms a day where we had a higher high but a lower low, so a day of indecision, and today another day of indecision with an inside day, an indecisive candle. We have the market trading in an uptrend. 3 trading periods ago the market changed trend to the upside, but we saw the market find resistance above the cloud and within that yellow zone of previous support and resistance, and was sold off today. And for the previous day's trading, the market has interacted with that zone and has been rejected again. Very indecisive trading. A spinning top type candle denotes indecision in the market here. Just looking at the a small pattern that's developing, it's a flag type pattern, and that could be significant. Flags tend to be continuation patterns, not always, but they tend to be. And if we do see a breakout, then we could see the market trading significantly lower. Basically, a flag is just a congestion area where the market takes a bit of a rest, and then the prior trend resumes itself back in the direction that it was trading in. Flags may turn into reversal patterns. As with most patterns, you can have a breakout in either direction, and completion of the flag will be a breakout in either direction, and not only a breakout but a close above the boundaries or below the boundaries. So if we do see a breakout down below the 1700 level, which is a very, very important level of support for this market, that would give us quite some confidence in this flag potentially meeting its target. And we use the measured move for a target, and basically it's the extent of the trend leading into the pattern projected down from the breakout. So the extent of the trend in this case, because it's a fairly small pattern, would be from around the 1755 level down to 1700, and it would give us a roughly about a 55 point target down below roughly the 1700, so roughly about 1740s level, down around here, around this previous area of support around the 1643 level. The market will need to trade through some solid support, however, before it does trade down there, so whether it meets its target is debatable. We do have the 1700 round number support, which will be very, very important to this market, and the market will need to be solidly bearish to trade down through there. We also have some minor levels on the way down at 1690 and 1680, and then an area around 1667, and between there and the previous level around 1675 is the bottom of the cloud, and that will be very solid support for this market as well. So the market will need to be very solidly bearish before it does meet that target, and it's debatable, as I said, whether it does trade through there. If we do have a close up above the pattern, then we have solid resistance overhead at the top of the cloud, which is now at the top of this highlighted yellow zone around the 1729 level, and a breakout up above there could see the market testing fairly quickly up to the kitchen zone, which is trading at 1748. In terms of the Fibonacci extension, we're examining the relationship of the current first time frame uptrend that the market's into the previous time the market was trending up, and here we see for the previous day's trading the market tested above the 78.6% level, and now today we've tested to there again, and we've seen rejection from there, and that does suggest that there is potential for a change of trend to the downside. So this rally that the market is attempting is very, very weak. 2 indecisive spinning top type candles, and strong rejection from the 78.6% level, and also from the 61.8% level here, where the market's failed to close above. We've probed above there and failed to close above there, and it does suggest that there is potential for a change of trend in the first time frame back to the downside. With the Fibonacci retracement, we're examining the relationship of the current first time frame downtrend to the first time frame uptrend, and here we see rejection from the 38.6% level for the previous day's trading, and that coincided with the top of the cloud. Today's trading tested almost to that level, not quite, but almost to there, and does suggest potential for a change of trend. Now in terms of the stacked trend channels, and here we have that trend line that I drew in previously, and then this stacked trend channel, the market is attempting to rally, or it has attempted to rally towards the trend line. And if the market does sell off and trade down through the 1700 level, we do have a target at the moment at the bottom stacked trend channel coinciding with the bottom of the cloud, so that's going to offer itself as very strong support for this market. As we move on, we will interact with the 1667 level, so if the market does fall through the 1700 level in a bearish way, then a test down to at least the bottom of the cloud, or perhaps even beyond, is not beyond possibility. In terms of Ichimoku, obviously a neutral market in big picture terms, with the market trading within the cloud, and the market remains bearish in the medium and fast term timeframes by trading below the Kijun-sen and the Tenkan-sen. We have a flat Kijun-sen here, and the market has been attempting to rally towards that flat Kijun-sen. The flat Kijun-sen represents equilibrium in the medium-term time frame, and this rally is really doing it tough. We're seeing for the last 2 days indecisive spinning top type candles, the influence of the resistance at the top of the cloud and this zone that I've highlighted are really in play at the moment. And it's unlikely that this market will break out to the upside and test to the Kijun-sen in a hurry. In terms of the below here, as I've mentioned already, we do have very solid support down below. So with this market, also a market where it's bound between an upper boundary in a large zone between the Ichimoku indicators and the cloud here up to the Kijun-sen extending up to 1748, but also solid support down below around this 1700 level. Looking at this current candle as it's developing, it looks as though we are having a change of trend to the downside. So we already have a candle with a lower high and a lower low. That candle hasn't developed yet. We are seeing the buyers in control of that market at the moment, with the market close up towards the high, but not a candle that's developed yet. That market could continue trading down, it could continue trading up and take out the high as well, and we don't really know where it's going to close. But at the moment the buyers seem to be quite strong, even though the market has potentially changed trend, so quite some indecisive trading and a good battle between the bulls and the bears at the moment. Interestingly, also with the low of this current candle, it has tested just to the barrier of that flag, so that's important, and there has been rejection from there. So it highlights how important the barriers of this flag pattern are, the support offered by the flag here. But really for tomorrow's trading, this 1700 level is crucial to the market, as is the areas above and within this highlighted zone extending up to about the 1730 area roughly.